Charts are red, alerts are buzzing, and while everyone hopes the crypto bull run is just around the corner, the market is reminding us why it never travels in a straight line. Today we're diving into why crypto is down right now, the major forces behind the drop, and whether this is the final flush before a massive rebound or just another leg of pain. Stay with me, you'll want to catch the full story before placing your next trade. 1. What's going on right now? The total crypto market cap has slid sharply this week, dropping from well over $3.7 trillion to around $3.54 trillion. Major coins are under pressure. Bitcoin has fallen below $100,000 in recent sessions as the risk-off mood spreads. Over $395 million in leveraged positions liquidated within 24 hours on some platforms, wiping out large amounts of investor capital. So the question becomes, what triggered this drop? Let's break it down. 2. Key news and macro drivers. The Federal Reserve dropped hints that rate cuts may be further away than investors hoped, cooling risk assets such as crypto. A renewed risk-off sentiment has arrived. Investors are shifting out of speculative assets into safe havens, and crypto is feeling it. Major support levels were broken. With Bitcoin sliding, the broader altcoin market followed in its wake, indicating a rotation out of crypto, at least temporarily. Volume remains high, interestingly, a sign that this isn't just a quiet lull, but active selling and restructuring. 3. Is this the last dump or more pain ahead? Two possible scenarios are playing out. Scenario A. This is the final flush. If major support holds, liquidity stabilizes, and macro news turns favorable, for example, a rate cut surprise or regulatory clarity, this drop could mark the bottom, a clearing of weak hands before the next surge. Scenario B. More consolidation or decline. If the Fed stays hawkish, risk appetite remains low, and institutional flows don't return soon, crypto may trade sideways or drop further into early 2026 before the next major leg up. Given the data, we may be somewhere between both. The drop has triggered some capitulation, but full confidence hasn't yet returned. That means the risk-reward is potentially improving if you pick your moments. 4. What to watch to know which path we're on. Keep an eye on Bitcoin's return above key levels, around 105K to 110K. If it holds, that's bullish. If it breaks lower, warning signs. Track on-chain data for accumulation by large wallets and institutions. If whales start quietly buying again, that hints at scenario A. Watch macro headlines. Inflation data, Fed comments, large ETF flows, in or out, will dictate sentiment. Look for altcoin strength emerging under the hood. If mid-caps, or smaller coins, begin to hold up as Bitcoin recovers, that's another bullish sign. 5. Why this matters for you. If you're an investor who's been waiting for an entry, this drop may represent an opportunity, but only if you understand the context. Blindly buying a dip without watching the signs is risky. Instead, consider scaling in, keep size modest, and look for confirmation that the market is stabilizing and turning. If we're at or near the last dump, buying now could set you up for outsized gains when sentiment flips. If this is just part of a longer consolidation, you'll want to have a plan to stay flexible. Final thoughts. Crypto doesn't move in straight lines. The bull runs come after cleansings, fear, and capitulations. We might be living through one of those cleansing chapters now. If this is the final big shakeout before the next explosive move, you want to be watching, ready, and informed. If it's not, then patience matters more. Check the links in the description for real-time charts, on-chain data, and global macro headlines. This is my personal analysis, not financial advice. Do your research and know your risk. What are your thoughts? Is this the final dump, or is crypto still grinding down? Drop a comment below. Thanks for watching, stay sharp, and trade smart.